everybody, Allison here. I am the Director of Risk Tolerance here at Simpler Trading, and in today's video, I want to talk about Apple. So I feel a little sad about this one just because I missed a really great entry. For those of you who caught it because you have the divergent bar indicator, or you've just been following along with some of my analysis this year on what to look for potential short opportunities, then I hope you're able to catch it. But basically, we had a nice move to retest the 100. We tried to trade a little bit above it, but ultimately failed, starting to make a bearish divergent bar while the Bollinger Bands were flattening out. So this was your first clue to potentially look at shorting this for a lower low. Now, I understand this would have made me a little hesitant too to short from here, just because you do, for the low of that day, even have support right there with the 10. But if you had the cojones and were able to take the trade, then well done, because it followed through very nicely with that lower low the next day on the Fed news. And this was actually the second day where you had an opportunity to look at shorting it. Whenever it went up to test the 100 again and it failed it after trading above the 100, that is usually a good sign to look at shorting, especially even if you waited for the close of the day, right? The fact that the close of the bar not only broke the 10 but the 30 period simple, all of this was a good sign that we could reverse back down to at least test the ATR trailing stop, if not maybe see the trend move lower. So I unfortunately missed that setup, and the very next day when I tuned back into Apple, it had followed through very nicely on this and did in fact go right into the ATR trailing stop. And so now this is kind of the current line in the sand. So what I'm looking for on Apple is one of two things to potentially look at shorting this continuing to the downside. The first thing I'm looking for is ideally a bounce back up into the 30 period simple, maybe even to fill this gap that we made here back off of the Fed news into the next day. And if we get any sort of move up, but it stalls at these moving averages, ideally if it can make another bearish divergent bar, then I would look to play this back down at least into the ATR trailing stop, if not for a trend move lower. And that would be a great entry if Apple can end up giving it to us. But even if it doesn't end up bouncing back up, I still like the possibility of this moving lower. However, what I would personally need to see in order to jump in is confirmation that we're breaking the ATR trailing stop. And though Friday and today we did start to break the level from an intraday perspective, both of these bars ended up holding the level into the close, and therefore it has maintained trading support. So ideally what I need to see is a break of this level into the close to where support turns back into resistance, very much like it did here. And when that happens, right, that's a good sign to look at playing this lower. Why? Because we have the momentum already starting to cross below the zero line, which shows bearish weight and has plenty of room to move lower. We have a bearish signal on the compound breakout tool. We have a low compression squeeze, which could end up firing to the downside. We have levels that we've traded at lower than this year, right? So 130 might be a great next target to the downside, if not lower. We have the 10 getting ready to cross below the 30 while both remain below the 100. So if we start to see that, that starts to go into a bearish trend. So we have all this bearish weight either lining up or starting to line up. But this to me is kind of the last line in the sand. And so I would really prefer to start to see a break in this. And if it breaks, then I wouldn't mind playing it lower. The first target I would have is down to 130. Followed by the 120 range. And that's really the bigger level I'd play this down into. It's a monthly support level. The other reason why I still like this though is also the weekly setup here on the weekly chart, right? You do see some signs of price support around this range, which makes sense why the ATR trailing stop is there on the daily chart. But you can see the weakness that's starting to appear here. The moving averages, which are consolidated, are starting to turn bearish. So it wouldn't take much for this to start to go into a bearish trend. The momentum is already bearish below the zero line and has room to continue down towards the bottom of the axis. Don't quite have the bearish signal on the compound breakout tool, so I would prefer to see that. Right now it's still more a consolidating one, which makes sense given the overall consolidation that we've been in. But once again, even the weekly chart is angling a bit more towards that bearish sentiment. Now, this week we have CPI data. I don't know which way that's going to move the market, right? It could come out as a surprise and the market's very happy and everything bounces back up, and in turn Apple could bounce up with that. So we want to keep our risk low. And you might wait till the news comes out, because if Apple bounces up into this resistance level and holds, like I said, this would be a much better place to then look at reshorting from. However, if the CPI data comes out negative and causes the market to sell off, just like it did back here, even if it's just off the open that it sells, then you might want to be in this trade already in order to participate in it. So no matter what, I'd keep my risk very low, just due to the uncertainty around how that news could cause the market to move. But between the technical setup and some of the stuff happening on the manufacturing side with China, to me, I like the weakness here in Apple to where it could start to go lower. And if it really breaks 120, then I'd be looking for this to go back down towards 100 and test that. We've seen a lot of the big names either test or break 100 this year. And so I don't think it would be out of the question for Apple to do so. It's been arguably one of the strongest symbols, right, that's been holding on this year from a tech perspective. But if the market is going to really start to sell off, kind of like what happened here, Apple could very well go with it, especially with what the technicals are potentially hinting at. So there are a few different ways you could look to trade this. One way is you could just look to jump into a long put, right? You could go out to December. It's relatively inexpensive even here. And you could do something like the 125 put at 203 cost basis. That way, if we get down towards 130 sooner than later and it hits that level, you should ideally be able to close this out for a quick win. If it goes down to that 120 range, which is monthly support, it should put the strike in the money and certainly allow for a profit, especially if, of course, if we really start to bleed lower and it goes all the way to 100, which is not what I'm necessarily anticipating to happen by December. But you're certainly set up for it with the time in the trade, the inexpensive cost basis, and the flexibility that a long put can give you. You could also look to do this shorter dated, right? You could go out here to just next week's expiration and then consider a vertical spread to play down into that first target of 130. The 135, 130 is a 120 cost basis. It allows for a 380 profit potential. And certainly you don't need Apple to move as dramatically in order for this spread to go completely in the money and allow for a quick win. Just based off the lows of today, the lows were 135.67, right by your long strike, right? So even if we were to just go down to the lows of today or Friday, could very well start to put this spread in the money and once again allow for a quick win. So there are different ways to take a look at this setup and how you might consider trading it, whether it's just off the short-term idea that the CPI data could weigh on this, have us break the ATR trailing stop and start to move lower, even if it's just from an intraday move like this. Or if you're looking to try and play the squeeze and the idea that this is going to fire short and give yourself some time with a long put. Either way, Apple is still relatively inexpensive, so I like the risk versus reward parameters that this symbol can create while overall keeping our capital risk low for the account. Thank you so much for joining me. As always, have a great rest of your trading day. And remember, guys, if the CPI data causes any sort of positive bounce up, then look to protect your capital risk on this if you choose to, especially if we really start to break above the 30 or the 10 period simple, right? Then you might want to take some management actions, protect your capital risk, and then reevaluate things to see if resistance holds to where you can short from there back down again. But thank you guys for joining me. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye, guys.